now, right now. Right 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 now, right now. Oh, I got a real good feeling.
We try to bring you high-quality educational and informational content every single day. Why do you think the price is having such an anemic time? The news story of the hour. Jump onto the chart. Is this the beginning of a massive financial unraveling? We gotta add a little addendum to the show map today. So we start here on the daily. Now, we've been looking at the RSI on Bitcoin's daily chart for the last several days. They always have been, but it's been increasing over the last 50 years since the government has been Hey guys, what's going on? Jeb here, and welcome back to Coffee and Crypto Live. This is your week daily morning show where we bring you the latest in everything Bitcoin and cryptocurrency. And in today's episode, we are going to be talking about the rally that is taking place right now on Bitcoin. There is a very important level of resistance that Bitcoin is currently flirting with. And today, we're going to be analyzing whether or not Bitcoin is able to break through just that level. As you guys will know, Bitcoin was under this uptrending level of support. And then after we fell to the downside, we ended up drawing this uptrending level of support as well. And as you can see, Bitcoin is attempting to break into this rough zone right here. Can Bitcoin break through this zone and actually start rallying aggressively, or is Bitcoin going to fall over once again? That is the question on the table right now, and so we're going to be doing some very deep analysis on this today. Very much looking forward to being here with you guys. As always, my name is Jeb McAfee. I've been working in the cryptocurrency space for almost a decade, and I love teaching you about how to build financial sovereignty. It's because of financial sovereignty that I was able to have this stream go out a couple of hours later because there was a neurology appointment that we scheduled 16 months ago. We were able to get over to that. So apologies for being late. If you saw the community post, I told you that we would be attempting to make the stream come up a little bit later today. Here we are. I want to help you build the kind of wealth that allows you to have options, because it's so easy to get chained down and bolted down to some kind of just job that you hate. Now, I'm lucky. I love my job. I can't ever turn my brain off. My wife's like, Jeb, you gotta be here with me right now. You gotta stop thinking about work. Like, I love what I do, but it's very difficult to go through life doing something that you don't love, but you're a slave to it. I don't want you to have to go through that. I want you to have freedom. And so it has always, and it will always be my commitment to you to help you get there. That's what we're doing with our family, and that's what I want to help you and your family do as well. So thank you so much for tuning in. Let's read chat. Really appreciate all of you guys. Randy Tanner, 7953 said, hey, buddy, from icy Tennessee. Shout out to my home state of Tennessee. The Quiet Front said, lol, why does anybody... Yeah, right. There you go. Declan Laverty said, you called 65, Jeb. Stick with it. Crypto OG Havoca said, hi. 65K is very much in the cards. I'm telling you straight up, I don't know where the bottom is. I'm not going to tell you where the bottom is. What I will say is we made this prediction back over here about a month ago. If Bitcoin does not confidently break above 98,000, then $50,000 to $75,000 is likely. But this would be our invalidation. You know, it's very important that we are constantly reevaluating our models, constantly reevaluating levels of support and resistance, because we have to be able to move with new information. And that's a very difficult thing. Being a teacher, being an influencer, being someone who covers markets, is that when the markets move, naturally, as a long-time investor in Bitcoin and cryptocurrency, we have to keep up with those movements. And sometimes the market's going to choose to go in one direction or choose to go in another direction, and we have to make sure that we are paying very close attention to that so that we can be, so that our viewpoints, our predictions and whatnot are up to speed with that. So we're going to be talking about Bitcoin today. We're also going to talk briefly about an X post that Donald Trump made. Our first subject of today will be Bitcoin itself, but I also want to bring up this post from Donald Trump. He has said that there is a major armada. Those are direct words. Let's find the tweet here. It was from a little while ago. There's a massive armada floating towards Iran. I'll pull this up while I'm talking here. But there's a massive armada floating towards Iran and basically threatening them if there is not a deal, then there's going to be war. A massive armada is heading towards Iran. So we're going to talk about that here in just a minute. So without much further ado, let's go ahead and dive right on into it. Real quick, today's video is brought to you in part by FEMX. If you guys have not already signed up for FEMX, I highly encourage you to do so. You, as you can see, can get up to $1,200 absolutely for free. Net deposit is $10,000. And then the futures trading volume, if you do $1 million, you're going to get $1,200 free of charge right there. But you will also, if you sign up and deposit and trade at least $250, you're going to be getting access to the 3-5A Mastery course, which is the place where we're going to teach you about the 3-5A trading strategy. As you can see right here, it is a strategy that is going to help you substantially when you are looking to make trades in the Bitcoin and cryptocurrency market. All right, let's get started. Bitcoin rallied up to $98,000 over the last couple of weeks on the 14th of January, about 2 weeks ago today. And ever since then, we've been in this large correction. Generally speaking, it's difficult to tell where Bitcoin is going to go when it's in a range because it's in a range. We're not in a trend. We're in a range. That's kind of the whole point of the idea of us being in a range. We don't have a direction. And what is very tempting is to come to Bitcoin and say, Bitcoin, this is your range. This is what you're going to do. You're going to move here. You're going to do this because I want you to. And what we have to be careful of is we have to be careful of reading our emotions, reading our thoughts, reading our feelings into the chart. This is something that we deal with very commonly. You will see this in our chat. You will see this in everybody's chat who does what I do professionally. There is this constant demand to make a prediction about which direction the market is going and stick to it and not change your stance no matter what the market does, and you have to be right all the time. I am here to tell you that being a profitable trader, and more importantly than being a profitable trader, being a profitable investor is not simply about picking which direction the market goes. Anyone can throw a number out and say the market's going to go here on this day. What we have to do to be successful, and the successful among you know what I'm talking about, is we have to be prepared for both scenarios. Every single successful investor in history has become successful because they have prepared themselves for both outcomes. The idea of it could go up or it could go down is true. It can go up and it can go down. So what we have to do is we have to take control of what we can control. And that is that we need to operate in such a way that we are ready for both outcomes. While Bitcoin is down here towards its support, it looks more likely that Bitcoin is going to drop down towards 65 to 70,000. Of course, if Bitcoin rallies up here above 100,000, then it looks more like Bitcoin's going to go into a rally. And so depending on where Bitcoin is, we should be looking ahead based on the trend that we have. Right now, we have the trend that we have, not based on the trend that we want. You might want an uptrend, but we have to look at the trend we have. Right now, we have a downtrend in the last 2 weeks, and we also have a bear flag over the last 3 months that points down. That's the trend we have. So don't trade the market you want. Trade the market you have. I cannot begin to tell you how many times I have given that exact piece of advice over and over and over again. Trade the market that you have. It's that simple. And so what we absolutely have to do is we have to trade the market that we have. We have to trade the market that we have. All right. So let's go ahead and keep talking about Bitcoin here. The most important thing that I want to share with you is the fact that Bitcoin is a long-term investment. This is not a short-term game that you're playing. If you're trying to play a short-term game, you are going to lose. You are going to lose. You are going to lose that. By the way, I do want to mention this because it has come out just now. As of today, the Federal Reserve held interest rates steady at 3.75 to 3.5 to 3.75. So that's where we are right now on that. So we're going to talk a little bit about the Fed rate decision happening right now, and of course, the press conference is going to be coming at 2:30. So again, that decision was made. We have the pause, and that is part of the reason that Bitcoin is dropping here. And that all kind of ties into the conversation that we're having right now, which is the conversation around the fact that around the fact that we need to train the market that we have. And right now, the market that we have is a market that is pointing down. It is a market that is being overshadowed by gold. It is a market that is being overshadowed by silver. It is a market that is being overshadowed by silver, and it is a market that is in an extremely exciting buying zone. It's a market that is in a zone where we have a great opportunity to acquire Bitcoin. And this pause that we've just seen in the last 4 minutes is also probably going to put downside pressure on Bitcoin, because a lot of people have been hoping for and expecting even that we were going to have a major capitulation on Bitcoin if we see the Fed rate pause. So let's see what Jerome Powell says here in about half an hour and how that's going to impact the market. That's going to be very, very important, that meeting that comes out relatively soon. Okay, we also have our support right here. We have a downtrend. We have our little bear flag. So that's that. So let's zoom out and talk a little bit about what investing and trading in this market should look like right now, while we give the market a little bit of time to print data, because we are, of course, seeing the market have a great deal of volatility right now following the Fed rate decision. We're jumping around here several $1,000s. We're jumping around a couple of $1,000 range within a couple of hours. While we give the market a little bit of time to shake out, I want to take a look at a couple of different things. So let's start off over here with the with CoinMarketCap. As you can see, Bitcoin right now is trading at $89,450. We've been watching that pretty closely. Big news for today is the Fed rate decision. We also have Ethereum trading once again at $3,000. Of course, we know our favorite stablecoin Ethereum likes to sit there at $3,000, but this is a relatively decent buying opportunity for Ethereum, because if you see Ethereum rally back to all-time high, that is a 66% return. To get that in the stock market, you're gonna have to wait 3 years. On Ethereum, I mean, it could take 5 minutes. It's a much more mobile investment, which is part of the reason that people like Ethereum. Binance is sitting at $900. XRP sitting at $1.91. Solana sitting at $125. Cardano's down here at 35 cents, as you're going to see pretty soon. I think Cardano is in an excellent buying zone. We're going to be looking at ADA in a future video, but I do just want to give a big shout out to anybody who's interested in ADA. This chart right here is absolutely awesome. I love this. Look at how low Cardano is here. Even if you think Cardano is a dead project that's never going to go back to all-time high, you cannot deny the fact that we're in this broadening wedge and we're at the exact bottom of it. And we also have RSI at its low down here. This is a fantastic time to consider loading up on Cardano here. So just something that you want to consider. I would highly, highly, highly encourage you to consider an acquisition of ADA here. I mean, it could drop it could drop considerably more, right? But if you think ADA is a good project, then you're in pretty good shape. Even for it to go back to its all-time low since the bear market, since the previous bear market, you're only looking down 34%. So if it goes to the top of this range up here at like $1.75, you're looking at like a 13x risk to reward ratio. For any of you guys that believe in alt season, I mean, there's the time to accumulate right there is ADA. And it might take a year or two for that to come to fruition, but I mean, that's a very interesting zone, and I'm planning on buying a little bit of Cardano to add to our portfolio. Not much, just a little bit. And you're going to see my price prediction video on that coming out pretty soon. But anyway, Cardano is in really interesting territory. Really like to see that. I love the 45 billion maximum supply. Always have. I think ADA is going to do pretty well. All right. Now, let's go ahead and look at Bitcoin. I want to talk about Bitcoin. And most importantly, I want to remind you of the importance of long-term investing in Bitcoin. It's very easy to get caught up in the short-term volatility of interest rates and funding rates and this direction and that direction. But the most important thing with Bitcoin is consistency. The most important thing you can do with Bitcoin is consistency. And while Bitcoin is blessing you with an opportunity sitting down here around $89,000, it is a great time to continue loading up on Bitcoin, because for Bitcoin to go back to all-time high would be a 41% return. That is an incredible, incredible return. Now let's actually look at some data. Every time that we've seen Bitcoin drop from top to bottom, it has done so in a certain amount of time. So this major correction during this bull market has been 181 days. This major correction was 78 days. And then this correction so far has been 112 days. Every day that passes on Bitcoin is a day that we get closer to the bear market bottom. We are obviously in a confirmed bear market at this point in time. But as we know, we are having diminishing returns and diminishing losses over time, but the overall time structure seems to be about the same. The time to the bottom was 420 days in our first bear market. The time to the bottom was approximately 365 days in our second bear market in history. And the time to the bottom in the third bear market was 378 days. If you take the middle ground there, then what you're going to see is that about 370 days is about the middle ground, and that puts you right here in our green box, right? This is our green box right in here, is about 378 days that we would likely see Bitcoin, where we would likely see Bitcoin bottoming out if it even comes down here. And so there is a very real possibility, especially with the Fed pausing rates, pausing interest rates, that we're going to see this correction down towards this level. And so that's what we're going to look at right now. All right, Lol, this is not a confirmed bear market. Based on every single technical factor that we have, it is. Now, it might be a shortened bear market. It could be a very short bear market. That's very possible. And I think that it is going to be a much shallower, maybe not shorter, but a much shallower bear market than we've had in the past. And honestly, for me, I just go to sleep every day and I think to myself, oh, great, one more day passed. That's one more day that we have of the bear market over. And that's where we're likely going to see something happen relatively soon. So I have a question for you guys. I have a question for you guys. Would you rather, tell me in chat, would you rather me stay on the stream and cover the first 20 minutes or so of the Fed decision? That's about how much time I'm going to have, about 20 minutes or so. Or would you rather me wrap this out and shoot a video? I think it'd probably be better if we just scrap the video for today and just have the stream. I think that would be the best thing, is if we just stuck around and watch the live stream of Jerome Powell speaking at 2:30. So let's read a little bit of chat here, and then we're going to keep talking about it. Buy silver, people. Buy silver, people. It's going to Moonshot. What gets to 10K first, gold or Bitcoin? I think gold is going to get to 10K way before Bitcoin ever does, because I don't think Bitcoin's ever going to 10K ever again. Let's see. Financial sovereignty for the win, time and time again. Yes, financial sovereignty is very important. Financial sovereignty is our guiding ethic. It's our guiding ethos. It is the idea that we must build on the solid rock of financial freedom, of goods, of savings, of low debt, of control. As you know, I'm a Christian, and I believe every word that the Bible says is true. And in Genesis 1:28, God said, and God blessed them, and God had just created man and woman. He just created the earth, and then he created man and woman. And he says, and God blessed them, the man and woman, Adam and Eve, they just created. And God said unto them, be fruitful and multiply and replenish the earth and subdue it, and have dominion over the fish of the sea and the fowl of the air and over every living thing that moveth upon the earth. And in doing so, what he did is he created something called the Dominion Mandate. And the Dominion Mandate basically means this: get married, have children, have a bunch of them. They're a blessing. I love kids. We have 4 of them. And then with you, your wife, and your children have dominion over the earth. It could just as easily be called dominion, financial dominion. I call it financial sovereignty. That's the word that I believe the Lord gave me, is sovereignty. And that word, subdue, can also be translated to sovereign, having sovereignty over something. We as human beings, in the first chapter of the good book, we're commanded to have sovereignty over the earth. What does that mean? Sovereignty is a principle that means this: we are to bring the earth under control according to God's principles and then submit it to God for his purposes. That's what it means to have sovereignty. And so when you look at any area of your life, if you take sovereignty over that area, you are going to see that area grow. The word for subdue in the Hebrew was used for someone who would take sovereignty over a vineyard, a marshal, a manager. These people would take someone's business and they would bring it under submission. They would have sovereignty over it, and by having sovereignty over it, they would rule it well so that it would be set up to grow. And so in our finances, we want to do the same thing. We want to have financial sovereignty. We want to bring control over our finances. We do this through budgeting. We do this through investment. We do this through low debt. We do this through generosity. We do this by following the 7 laws of money. And by building financial sovereignty in our life, what we do is that the farther we walk down that road of financial sovereignty, the more peace we have financially, the more joy that we have financially, the more love we are able to show with our finances by having low debt, right? By having low expenses, by having high income. These are goals that we should reach for. And this is why we dollar cost average into Bitcoin. This is why we DCA into Bitcoin every single month. We DCA into Bitcoin because we believe that Bitcoin is a strong asset that is going to preserve wealth over time. And we believe that if we build a larger Bitcoin portfolio, that we're going to build our wealth. This is the reason that my family, we invest in our retirement accounts, 401ks. We invest in high-income ETFs like the NEOS funds, SPYI, QQQI, BTCI. I'm looking at some other funds as well, JEPG, not too interested in SHID, but SCHD, right? We talk about these different high income producing ETFs because we want to build passive income, right, to go alongside our Bitcoin. I've been investing in Bitcoin for 8 years. Just in the last several months, we've started investing in passive income producing funds. These are all moves that our family makes. We maintain our budget. We have all of our transactions put in, categorized. I can tell you down to the penny how much money our family has spent this month. I know the number off the top of my head, and I always do. And I also know whether we're over or under budget. I know how much money we're investing every month. I know our finances forward, backward, left, right, and up and down. And because I do that, that creates a sense of peace in my heart that allows me to be more present with my family. And that's what we're doing here with Bitcoin. And if you want to build financial sovereignty with Bitcoin, I'm going to tell you a couple of the things that you need to do. First of all, you need to minimize your expenses. You need to maximize your income. That creates something that we call margin. With that margin, you're then going to take that margin and you're going to invest it in a multitude of different areas. Solomon in Ecclesiastes tells us to cast our bread upon the waters. What does that mean? That means we put out resources. In the time it was bread, today it's money. We put out resources expecting a return. We invest. By the way, man did not create investments. God created investments. Man simply popularized them. God created investing, not us. Right? Cast your bread upon the waters. And then Solomon also tells us to invest in 7 or 8 different ventures. Not 1, not 100, 7 or 8. Pretty good number. Somewhere around that number. Invest in a diversified portfolio that protects you because you don't know what's going to happen. This all shows up in Ecclesiastes chapter 11. And as I have become a more experienced trader and investor, I make mistakes every day. Like I look back on 2025 and as you guys know, we had a terrible travesty happen to us in 2025. And I look back, I'm like, I made some really stupid decisions. Like I did some really dumb stuff with money. I'm looking back, I'm like, man, I'm never going to do that again. And while it kind of hindered me in 2025, in 2026, I'm like, wow, I'm making some really good choices because I'm doing the opposite of the stupid thing I did in 2025, right? And that's why as I've become more, as I have grown as an investor and as a provider for my family and as a financial educator, I've come to learn that this is a very helpful passage. Let me just go ahead and switch this over to ESV. This is a passage that I think will help you quite a bit, and then we're going to talk about Bitcoin. Just wanted to kind of give a little bit of a teaching on what to do with money because basically we're just waiting around. We're going to I think we're going to nix the video today, and we're going to watch the Fed meeting. Ecclesiastes 11 says, cast your bread upon the waters and you will find it after many days. This is the biblical principle of investment. Give a portion to 7 or even to 8, for you know not what disaster may happen upon the earth. This is the principle of diversification. If the clouds are full of rain, they empty themselves on the earth, and if the tree falls to the south or to the north, in the place where the tree falls, there it will lie. He who observes the wind will not sow, and he who regards the clouds will not reap. In other words, be consistent with your investments. Don't watch my technical analysis and say, well, I'm watching the clouds, so I'm only going to buy Bitcoin down here at 65,000. Trade the market you have. I cannot stress this enough. A very wise turtle once said, the past is history and the future is a mystery, but today is a gift. That's why they call it the present. A very wise turtle once said that. He was absolutely right. Trade the market you have. Don't trade the market you're looking forward to. Don't trade the market that was. It's too late for you to sell at 126 at the all-time high and short Bitcoin. And it's too early for you to buy Bitcoin at 65,000 if we go down there. Trade the market you have. Is $89,300 a good investment? A good time to invest in Bitcoin? In my opinion, yes. In my opinion, it is. It is the market I have. And if we're not careful, we will observe the wind, or the RSI, and we'll regard the clouds, or the MACD, and we will never sow, which is invest, and we will never reap, which is take profits. This is the principle of analyze, but don't overanalyze. This is the principle of diversification. This is the principle of investment. These are biblical principles. And when you do them, you will build sovereignty in your finances, which is where the phrase financial sovereignty comes from. And so my encouragement to you is to trade the market that you have, and the market that you have right now is Bitcoin is trading at $89,000. And it could go lower, but it could go higher. Everybody's like, Jeb. Jeb says it could go lower, it could go higher. Wow, Jeb, yes, that's exactly what I say. It could go either way. Be ready for both. Welcome to investing. You must not realize that markets can go up or down. There's no such thing as a honest analyst who is going to tell you for absolute fact which direction the market's going to go. Even insiders with insider information can be wrong. It just doesn't work that way. There's no one at FOMC or at CoinMarketCap or at Coinbase or at Crypto.com that has a little lever and they say click and then the market goes up. And if you just had that information, you would know exactly what you should have done. It doesn't work that way. You have to be prepared to make money in both directions. And if you're not prepared to make money in both directions, I'm here to tell you that you're going to probably fail. So my philosophy is this: 89,000, great time to buy. Not the best time to buy, could be better, but pretty good time to buy. So I'm going to buy. If we go down to 65, I'm going to make sure that I have cash on hand. I'm going to buy more. I'm going to load up. I'm going to buy more. I'm going to take on more risk down here because I'm getting a better deal. The same way we're going to talk about in this video that I'm working on relatively soon about how investing in ADA right now, potentially an extremely good idea. Even if you don't believe in ADA, just because of the risk to reward profile. Incredible risk to reward right now. Where will it go? I don't know. But I certainly think it's going to go plus 35% faster than it's going to go negative 35%. Right? I mean, it's that simple. If ADA dropped to the lowest level it's ever dropped to since the previous all-time high, it dropped 35%. For it to go up 35%, it only needs to go to 48 cents. It's really not bad. This is an incredible entry right here. It's incredible because the risk-to-reward profile is enormous. If it goes back to where it was at $1.31, it's a 9x risk-to-reward ratio. It's really that simple. So don't trade the market you want. I'm going to say it again. Say it with me now. Trade the market you have. Don't trade the market you want. Trade the market you have. What market do you have? And is it a good trade? I have found in my life that looking into the past yields a little bit of wisdom, but mostly just depression. And that's not just because I've gone through a lot of very difficult things in my life, although I have. Many of you guys know our story. Last year, we lost our third child to a congenital heart defect. Like, I understand how dangerous it is to look into the past, because if I sit there and dwell on that, I'm going to go insane. Like, I will lose my freaking mind. If you've ever lost a child, you understand what I'm talking about. If you haven't, with all due respect, you don't know what I'm going through, right? If I look into the past and I focus on the past, I'm going to get super depressed. Looking at 126, oh yeah, obviously what we should have done is we should have shorted exactly at 126.200. It was so obvious. Yes, in hindsight, it's brutally obvious. In hindsight. We have to trade the market we have. Now, we can look into the future and we say, oh my gosh, we're going to run out of money at this point. We've got this happening. We've got this concern, that concern. What gives? What's going to happen? And all that yields is anxiety. In the past lives depression. In the future lives anxiety. But in the present lives purpose. And so trade the market you have. Be where you are. Be present. You being present is a present to yourself and your future self. Being so caught up on the mistakes of the past, on, well, I should have shorted up here, or I should have bought back here. That can be true and not be helpful at the same time. It can be true that we should have shorted here, and it can also not be helpful because we're not here. We're here. That's where we are. So what you have to do is you have to trade the market that you have. Where is Bitcoin right now? It's at 89,000. And right now, considering we just had the pause, there's a very real chance that we're going to dump. I don't know which direction we're going to go, but what I do know is that if we do see a dump and we drop below 85, that's where all bets are off. We're probably going a lot lower. All right, I'm going to go ahead and queue up Jay Powell. We're going to watch. I can only stay until about 250. After 250, I'm going to have to run. So that'll be the plan. That'll be long enough for us to see his actual statement, and that will be long enough for us to hear a couple of the questions. Won't be able to stay for all the questions because I got to run, but we will go ahead and pull up the live event right here. Hey guys, by the way, today's stream is brought to you in part, once again, by FEMEX. If you guys have not already signed up for FEMEX, you are leaving free money on the table. All you got to do is deposit some cash, get a bonus. If you deposit $2,000 and do $200,000 of futures trading volume, you're going to get $300 completely free. If you deposit $10,000 and do $1 million of futures trading volume, you're going to get $1,200 for free. This is cash that you get to keep. It is your money. Turning $10,000 into $11,200 is an average year in the stock market. That takes 20 minutes on FEMEX. I love bringing you guys deals where you get free money. This is free money. It really is. It's free money. All you got to do is deposit and trade, and you're going to get that that task bonus. And also, when you sign up, you're going to be getting access to 35A Mastery, which is our course where we teach you guys how to trade the 35A trading strategy. This is an extremely powerful trading strategy that is going to help you in your day trading. In fact, I'd say it's the gateway strategy to day trading. It's extremely powerful. We have used it many times in our trading. And I want to give you this course absolutely for free. It's over 3 hours long. It's a $600 value, but I'm going to give it to you for free. All you have to do, and this number has gone up, all you have to do is go into Femex, deposit and trade $250. It was $100. Now it's $250. I need to see you depositing and trading at least $250. And that number is going to keep going up. Next, it's going to be deposit and trade $1,000, right? And eventually, you're not going to get the course for free. You're just going to get a discount on it. So I highly encourage you to take advantage of the free course right now because you're going to want it. It's really great. It's very, very helpful. We teach about the 35A trading strategy, which we are actually watching Bitcoin play out right now. I mean, the 35A trading strategy looks like this. This is an example of the 35A. 1, 2, 3, 4, 5. And then you have the A, B, C wave. If this strategy plays out, then we're going to see a C wave extension down here towards $65,000. If not, then great. Maybe we have a short and bear market and QE saves us, but I'm not so sure that you're about to see aggressive QE if the Federal Reserve rate is going to be held steady. So all of that to say, get some free stuff, sign up for Femex with the link in the description box down below. Let me check something real quick because we're changing things a little bit on the fly here. Instead of doing a video, we're also just going to do the stream and cover the actual announcement from Jay Powell. Let's read a little bit of chat. Everything, let's see, JEPG is good too. Yeah, give me a 1 in chat if you guys are interested in high-income ETFs. Would love to hear your stance on that. You can easily get over a 20% return on some of these ETFs if you blend them correctly and you consider the NAV appreciation. For example, QQQI is returning about 20% per year, including the dividend, including the distribution, and the NAV growth. SPYI is returning about 16, 17% right now. Not necessarily as much as Bitcoin, but it's much more consistent. And you can generate income, which is nice because ultimately Bitcoin doesn't spit off income. And also, while we're talking about that, here's just a little side note. BlackRock is actually building a high-income ETF as well. BlackRock just filed an S1 for a Bitcoin premium income ETF. Most people are missing what this actually signals. This isn't just another Bitcoin product. It's BlackRock monetizing volatility while institutions stay exposed. The strategy: hold Bitcoin plus IBIT shares, sell covered calls, distribute premium income to investors. BlackRock is building infrastructure for investors who want Bitcoin exposure without needing massive upside to profit. While retail debates if Bitcoin will hit 150K or crash 50K, BlackRock is creating products that make money in both scenarios through option premiums. This follows IBIT's $70 billion assets under management, making it the largest spot Bitcoin ETF in just 2 years. The same firm managing $14 trillion isn't gambling on price predictions. They're building a systemic income stream from Bitcoin's volatility itself. This is very similar to some of the other NEOS funds. BTCI, which I hold a little bit of. Let me show you this, and we know that the speech is going to be happening pretty soon. BTCI, for example, over here on NEOS funds, doing 27% a year in distributions. That's a little over 0.5% per week, which is incredible. There has been NAV erosion, though, so since inception, it's doing about 20% per month. So I have a very small portion of our little portfolio over there in income-producing ETFs. In BTCI, the vast majority of it is actually in QQQI. So 14% per month on QQQI. This is something that we invest consistently in every single month. My goal is by 2030 to replace our personal expenses with dividend passive income so that we have complete and total financial sovereignty. And if I don't ever want to work again, I don't have to, although I will always work because I love what I do and I don't do it for the money. I do it because I love it. But I do want to have the freedom to have income like that. Oh boy, that's huge. Looks like they're copying strategy. And that's exactly what I was about to say. That's exactly what they're doing, is they're copying strategy with Stretch. 11% yield is incredible, right? And we'll probably see something very similar coming out of BlackRock relatively soon. So we are seeing a transition right now away from just growth investment to income-producing investment, and this is being done by selling covered calls on the underlying assets inside the fund. This is something that you guys are going to see us do a lot more content on over the next year or so. It's a big growth vector that we are working on. that is part of our overall mission to promote financial sovereignty to the masses. Hey guys, right before Jay Powell comes on, I want to let you know that today's stream is also brought to you in part by NordVPN. If you have not already, make sure to sign up for NordVPN. Here's why. There are hackers and thieves that are trying to steal from you. NordVPN is going to help keep you safe. When you sign up for NordVPN, they are going to protect you by keeping you invisible. So when you get our deal with NordVPN, you're going to get 4 months free. You're going to get 2 years for only $93, and then you're going to get those 4 months for free. So you're actually getting 28 months for $93. You're going to get access to the fast, secure VPN. You're going to get access to the ad tracker and the ad and tracker blocker and the password manager. Oh, also, by the way, and the anti-malware and browsing protection. What is all of that? Well, those are all different ways that chaos and thievery can seep in and destroy your peace. Thieves are trying to hack and steal from you, and not being able to manage your passwords is difficult because it bogs you down. You spend a bunch of time having to reset passwords and whatnot. So NordVPN is a fantastic value, something you should absolutely sign up for, and the link for that is in the description box down below. All right, let's get Powell up here. Where is my tab? There's my tab. All right. So it looks like we're not live yet. As I said, we are going to be wrapping the stream out in approximately 20 minutes. He is about to start his speech. And from there, we will probably hear a question or two, and then we will go ahead and wrap it out. Yes, which high-income ETFs are better? Yield Max has a lot of NAV erosion, so be careful with Yield Max, although there are a few good funds over there. Chippy, for example, CHPY seems to be a pretty good one I'm looking into getting a little bit of. But my core portfolio that I'm building over there is going to be like probably 80% funds that deliver below 14% a year. So that's probably SPYI, that's QQQI, maybe some JEPG, and a few others like that. And then probably about 20% of the portfolio are going to be significantly higher, like growth producers like BTCI. Oh, 14% a year. Shut up, me. There we go. What's going on here? What is this?
Decided to leave our policy rate unchanged. Having lowered our policy rate by 75 basis points over the course of our previous 3 meetings, we see the current stance of monetary policy as appropriate to promote progress toward both our maximum employment and 2% inflation goals. I will have more to say about monetary policy after briefly reviewing economic developments. Available indicators suggest that economic activity has been expanding at a solid pace. Consumer spending has been resilient, and business fixed investment has continued to expand. In contrast, activity in the housing sector has remained weak. A temporary shutdown of the federal government likely weighed on economic activity last quarter, but these effects should be reversed as the reopening boosts growth this quarter. In the labor market, indicators suggest that conditions may be stabilizing after a period of gradual softening. The unemployment rate was 4.4% in December and has changed little in recent months. Job gains have remained low. Total non-farm payrolls declined at an average pace of 22,000 per month over the last 3 months. Excluding government employment, private payrolls rose at an average pace of 29,000 per month. A good part of the slowing in the pace of job growth over the past year reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. Other indicators, including openings, layoffs, hiring, and nominal wage growth, show little change in recent months. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index indicate that total PCE prices rose 2.9% over the 12 months ending in December, and that excluding the volatile food and energy categories, core PCE prices rose 3.0%. These elevated readings largely reflect inflation in the goods sector, which has been boosted by the effects of tariffs. In contrast, disinflation appears to be continuing in the services sector. Near-term measures of inflation expectations have declined from last year's peaks, as reflected in both market and survey-based measures. Most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 3.5% to 3.75%. Since last September, we have lowered our policy rate 75 basis points, or 0.75 of a percentage point, bringing it within a range of plausible estimates of neutral. This normalization of our policy stance should help stabilize the labor market while allowing inflation to resume its downward trend toward 2%, once the effects of tariff increases have passed through. We are well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risks. Monetary policy is not on a preset course, and we will make our decisions on a meeting-by-meeting basis. To conclude, the Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We at the Fed will continue to do our jobs with objectivity, integrity, and a deep commitment to serve the American people. Thank you. I look forward to your questions.
Well, that was fast.
Hi, Chris Rugaber at Associated Press. Thank you. I wanted to ask that, you attended the Supreme Court hearing last week on the Lisa Cook case, and Treasury Secretary Scott Bessent criticized that as political. Can you say why you attended and what you would say in response to the Secretary's criticism?
So let me start with, I don't respond to comments by other officials, whoever they may be. It's just not appropriate to do that. I will tell you why I attended. I would say that that case is perhaps the most important legal case in the Fed's 113-year history. And as I thought about it, I thought it might be hard to explain why I didn't attend. In addition, Paul Volcker went to a Supreme Court case famously in, I guess, 1985 or so. So it's precedented, and I thought it was an appropriate thing, and I did it.
Great. And then just quickly follow on the job market. You mentioned last month that the household survey might be distorted, and you also mentioned the potential for overcounting jobs, which would suggest that we're still in a negative hiring pace. So do you see the drop in the unemployment rate as solid? And what's the basis for saying that things have stabilized? Thank you.
So, yeah, really two questions. One is, so we're getting through the distortions in the data from the shutdown. However big they were in November, they're smaller in December. So we're getting to a place where they're no longer material. They're still there, but it's a tweak here and there. The reason why we changed the statement, let me pull it out, was simply it used to say that judges that downside risks to employment rose in recent months. So we saw data coming in which suggests some signs of stabilization. I wouldn't go too far with that, but some signs of stabilization. There are also some signs of continued cooling. And so we thought that was no longer an accurate description of the data. In addition, the outlook for economic activity has clearly improved since the last meeting. And that should matter for labor demand and for employment over time. So for those two reasons, we thought we would take that language out of the statement.
Nick Timros, The Wall Street Journal. Chair Powell, you've generally avoided engaging with political controversies directly, and the video statement on January 11th was a departure. What made this different, and are you concerned it could draw the institution further into political debates? So today I'm simply going to refer you to the statement that I made on January 11. I'm not going to expand on it or repeat it. So I'm just not going to. This is really about the press conference and the economy and what we did today, and some ancillary areas, but I'm not going to be getting into that. Can you say whether the Fed has responded to the subpoenas?
I have nothing for you on that today.
Mike. Michael McKee from Bloomberg Radio TV. Have you made a decision on whether you would remain as a governor of the Federal Reserve? And if so, would you tell us what it is? And if not, when might we anticipate a decision?
Good question.
No, and I really, once again, have nothing for you on that today. Either.
He is frustrated
Why
and
would
sick
you,
of it.
Want to leave it all under the circumstances?
Again, I don't want to get into this. It's not something I'm. There's a time and place for these questions, but not something I'm going to be getting into today. Thank you.
Thank you. Claire Jones, Financial Times. Thanks a lot for taking my questions. In another one that might, lead to a similar answer. We've seen quite big movements in the dollar over recent days. What do you think is driving the US currency lower? And have you been at all concerned just by the extent of the volatility we've seen this week? Thank you.
So, Claire, as you probably know, we don't comment on the dollar. Really, the administration, especially the Treasury Department, has the job of oversight over the currency and exchange rates and all that. We don't comment on that. It's not our role. So I have nothing for you.
But, what's your view on the market movements? What do you think behind them? Is it asset managers diversifying? Is it?
Yeah, I just don't. We don't talk about the dollar. We don't talk about what moves it around. It's just not appropriate for us to do so. Really, the Treasury Department has that. It's their role, their bailiwick, and we stay off it. We do monetary policy and some other things, but we don't comment on the dollar. Sorry.
Neil.
Hi, Chair Powell. Neil Irwin with Axios. Obviously, no SEP in this meeting, but in light of the slight firming up of the language around growth in the labor market in the statement, should we assume that the timeline for any further rate cuts is pushed back compared to what people might have thought in December?
Well, first of all, if you look at the incoming data since the last meeting, clear improvement in the outlook for growth. The data have come in, and sentiment, the beige book, everything comes in suggesting that this year starts off on a solid footing for growth. Inflation performed about as expected, and as I mentioned, some of the labor market data came in suggesting we're evidence of stabilization. So it's overall a stronger forecast. Really, if that's your question. I'm not sure I answered your question.
But in terms of timing or pacing of any additional easing?
So we haven't made, what we'd say about this was that after this meeting, after the 3 recent rate cuts, we're well positioned to address the risks that we face on both sides of our dual mandate, and we'll continue to make our decisions meeting by meeting based on the incoming data and the implications for and the outlook and the balance of risks. Haven't made any decisions about future meetings, but the economy is growing at a solid pace. The unemployment rate has been broadly stable, and inflation remains somewhat elevated. So we'll be looking to our goal variables and letting the data light the way for us.
That's most important. That means they're probably not having any more rate cuts for a while. Or if so, probably only 25 basis points.
Questions you might answer. Thank you. You had previously, I believe, described the current policy rate being at the higher end of neutral. And if you look at the longer run, the S&P and the longer run rate, 16 of 19 officials are actually below there on their long run. Is the Fed still in a process of bringing it down towards a middle range of neutral? And what would it take to get there?
So the count I did was that 4 of the 19 were at or above that. And maybe I missed by 1, but I thought it was 4. And if you look at the dealer survey, it was 10 out of 58 where we're at or above. So you're right. It's the higher end of the range. What we say is it's within the range of plausible estimates. This is the higher end of that range, but so for some people they think it's neutral. I think, and many of my colleagues think, it's hard to look at the incoming data and say that policy's significantly restrictive at this time. It may be sort of loosely neutral, or it may be somewhat restrictive. It's in the eye of the beholder, and of course, no one knows.
That translates to this year
precision.
maybe 25 to 50 basis points more cutting.
So
that's what that means.
You got to follow up.
I get what you're saying, but some officials have described the Fed being in a mode of bringing it down eventually over time. Are you still in that mode, or is this a place to hang out?
Yeah, no, I would say if you look at the SEP from December, most people had additional normalization. But at the same time, we've done a lot of the process of normalizing. A good piece of it is done with 75 basis points, and before that, 100. It's 175 basis points we've cut since we began cutting in September of 2024. So you've moved now to, Fed funds is running just a little below 3.65%. So you've moved a good way. And we think we're well positioned here to watch how the economy performs, look at the data. We're not making decisions about future meetings, but we do think we're well positioned after those 3 cuts to let the data speak to us.
All right, I'm going to go ahead and call it there because we got to wrap it out. But I want to give a quick recap because that is most likely going to be the most important thing that Jerome Powell says during this entire meeting. In other words, he is saying that we are most likely at the correct funds rate between 3.5 to 3.75%, the otherwise neutral rate, the rate where the economy is best positioned to grow, while also, let's turn that down a little bit, where the economy is best positioned to grow while also being best managed, being best positioned to mitigate incoming inflation. So at least under the leadership of Jerome Powell, there is an idea that the Fed funds rate should probably be somewhere between like 3 to 3.5%. Maybe we're a little bit high. Maybe sometime this year, you should expect another 25 basis point rate cut, maybe up to 0.5 over the course of 2026. But in general, the estimation seems to be that while in 2024, we saw about 100 basis points worth of rate cuts. Last year, we saw about 75 basis points of rate cuts. Basis points worth of rate cuts, there is a high likelihood that the amount of rate cuts that will take place this year will probably be lower. And so that's something that we can take and we can use to help us make future predictions about the market. And you can see that on his announcement, even on these comments, even just in the last 10 minutes, even after he finished his press conference during the questions, you can see the last 10 minutes, Bitcoin has been dumping a little bit. And that's because overall the narrative is that rate cuts going to the floor, quantitative easing going through the ceiling is what's going to drive Bitcoin to the moon. And this does put a little bit of, this does douse a little bit of water on that fire. And so that would give us some kind of idea to say here that possibly Bitcoin is, possibly we're going to have to wait longer to see the kind of growth, the kind of rate cuts that a lot of people are hoping for. So 3% is probably here to stay. It's something that we're probably going to see sticking around for quite some time. So that is the biggest takeaway from the announcement today, is that the rates are going to stay the same, and they're probably going to stay the same for a while. And if we do see them come down, they're probably going to be a little bit slower. Something to keep in mind is that just because Jerome Powell is going to be out in, I think, May, does not mean that we're going to see the Fed completely change. The Federal Reserve is operated by the FOMC, which is a group of governors from the different Fed banks around the United States. And so Jerome Powell being gone does not mean that the FOMC is different. It just means that the Fed chair is different. And so the Fed will likely operate slightly differently under a new Fed chair, but it doesn't mean that the Federal Reserve is going to completely pivot over the course of this year. You should take what he just said, that the Federal Reserve basically believes that policy firming is at the policy, the rates policy is at or slightly restrictive of where it should be, probably to be basically the outlook for this year unless things change dramatically economically. So just keep that in mind. It means we're probably not going to see a bunch of big swings from the effective federal funds rate this year, which is honestly partially where we could see Bitcoin coming back down, finding a nice bottom, and then springboarding higher. So we'll continue covering all of that. I hope you guys did enjoy today's video. Make sure to follow up on those deals over at FEMEX. If you guys have not already, sign up for FEMEX, deposit $10,000, do $1 million of trading volume, which is pretty simple with futures. You'll get $1,200 absolutely free. That doesn't take long. You can get some free money over there, and you can also get access to the 3.5A Mastery course. All you got to do is deposit and trade at least $250 over on FEMEX, and you can get access to the 3.5A Mastery course as well. And on top of that, also don't forget to sign up for NordVPN with the link in the description box down below, or by going to nordvpn.com/Jeb. Make sure to sign up for both of those right now with the link in the description box down below. If you enjoyed today's video, make sure to hit that like button, subscribe to the channel, and before I go, I do just first want to thank each and every single last one of you for watching, as always, and I will see you guys in the next video. Peace.